All right, good evening, traders. Thank you for being here. Kathy, Roasted, Sonny, Richie, Jim, everybody here in the free room. Thank you for being here. Today is December 9th, 2024. My name is John Carrigan. I moderate the BYOB Trading Room. Again, thank you so much for being here. Got a few slides, not going to use them all, but we're going to go through them pretty much as quickly as possible. Hey, Mike. Hey, Billy. I just want to say, for some of you, this stuff might be a review. For some of you, it might be new. I don't know who's new here in the room, but hey, Brad, I'm going to assume that, I'm going to assume that some people don't know. There's some people in here that don't know what a lot of us do every single day. So it will be an introduction for them, and for the rest of us, it's going to be a review. All right. So this class is on an introduction into day trading. I've been trading for 20 years. I run the BYOB Trading Room. We usually skin profits just about every day. So if you're ever interested in joining us in the free room, it's only $7. We got the link posted there. It's in the, let me just slide this over. It's right up here in the chat screen. Just scroll up in your chat right over here. You can see there's a link right there just above Roasted. All right. And if you scroll up here, you'll also see my Facebook group. There's a link to that. Okay. If you want to see what that looks like, what do we got here? See if I can pull it up. Just a second. Right there. Okay, so this is what my Facebook group, no, this is my YouTube channel. Here's my Facebook. It's got Mr. Soprano. All right, everybody knows Mr. Soprano. All right, SPX 6000, BYOB Trading Club right there. This is it. And then I post my videos in here every day. I got a morning video, an evening wrap up on my trades. I give you a game plan to start out your day. I give you 5 bulls and 5 bears. It's way over 5 bulls and 5 bears, but these are charts that are acting bullish, and these are charts that are acting bearish. So you get that on there. So this is all on my Facebook. Along with that, I share other stuff that comes off of the LTA scanner. All right. And if you ever want a trial for the LTA scanner, you'll find a trial right there. Okay, a 14-day free trial for the LTA scanner, and you can see it'll shoot out trades for you all day long. All right. Then I got my YouTube channel. All right. If you're not a member, it's free to join. It's free to join my Facebook group. All right. If you ever want to join, it's free. And be a subscriber of my YouTube channel. That's free also, and that looks just like this. If you ever want to find it, again, I've got the links. Are up here in the, let's see here. That's not what I wanted. Just a second. Okay. And you can see I got the links if you scroll up in the chat over here. I've got Facebook and then YouTube right there. And then here's the $7 if you ever want to join. And you get 30 days. 30 days, and then it converts to a full membership. But for 30 days for $7, I'll be surprised if you don't make $7. Actually, I'll be surprised if you don't make the full membership money, because we just trade every single day, and I managed to find a good trade almost every day. All right, so okay, every morning I provide the traders. You can see right here. Here's a game plan. SPY over 608. I'm bullish. SPY under 606.61 is my bearish red erases green entry in the morning. So I get you a game plan every single day, all right, to start off your morning. And it's nice to have. And along with that, I give you the 5 bulls and the 5 bears. So I hope you consider hanging out with me for $7. You get a whole 30 days. So anyways, let's go ahead and get into tonight's webinar. It's an introduction into day trading. Let me see if I can pull this up. Let's go to the next one. All right, and then here it is. Okay, so this is me, John Kerrigan. This is my email address, john@byobtrading.com. Okay, and this is our website, byobtrading.com. Okay, my YouTube address right there, my Facebook group right here. And by the way, no, I don't have a copy of this PowerPoint, not this time. Again, thanks for being here. This workshop's being recorded. Recording will be on my YouTube channel, all right? PowerPoint will not be available for this one. I do not have it ready for public use right at this time. All right. Again, well, trading involves risk. All right. So it's not suitable for everyone. No communication from us should be considered as financial or trading advice. All right. We're just simply sharing what works for us. Okay. It is intended as educational purposes. You're advised to test all of our approaches or any new approach prior to implementing it. Past performance does not guarantee future results. Hey, Stefan. All right. Okay, so we got that out of the way. All right, so what I'm sharing with you tonight's changed my life. I think a lot of you could benefit from it. I think a lot of you who do the swing trading could benefit with maybe a better entry, maybe a different look at what you're trading. But it has changed. Day trading has definitely changed my life for the better. All right, so what is day trading? Day trading is the act of entering and exiting a position before the trading day ends. All right, that means you're going to enter a trade and exit the trade before the trading day is over. Now, trading day could go on till 8 o'clock. All right, that's an extended day. It could go on it could stop at 4 o'clock for you. And it could, your trade could wind up working, you could have you could be in a trade for like 2 minutes. I've had trades where I've, nailed it for $500 inside of 2 minutes. Some trades last me 2 minutes. Some trades last me all day. Okay. I'm just saying you don't know when your trade's going to end. All right. So if you're going to day trade, you're probably better resign yourself to the fact that you're probably going to have to sit in your chair in front of your screen until either your trade hits a target or you're just tired of managing it or it stops out, okay? So you might be in your chair in front of your monitor monitoring your position all day, all right? I'm just saying that because I've had trades last me 2 minutes. Shoot, I've had trades last me 1 minute, all right? And then I've had other trades that I can see that I'm in a daily uptrend and it took all day long for the consolidation to end before I finally got a pop out of that consolidation. All right. So if you're going to be a day trader, it's going to be hard to, I'm just going to say it's going to be hard to do something else and day trade at the same time and be successful. Okay. I'm not saying you can't day trade. I'm just saying it's going to be hard to be successful unless you're in front of your monitor and you're watching and managing your trade. Every trade requires 3 things, all right? You're going to have to, number one, you're going to have to enter that trade. So you're going to have a trading plan. That trading plan is going to define what your trade is, what you're looking for. It could be the LTA scanner spitting out a rounded bottom breakout, okay? And you say, okay, here's an igniting candle. I think I want to day trade this one because I see the igniting move, and I think we could have a 1, 2, 3. 1 is the igniting move, 2 is the rest or the pause, and then 3 is the follow through. All right, so you want to have a plan, and a plan is nothing more than let me just say it's a set of rules for you to trade by. All right. And that set of rules is supposed to be rules so that you succeed. All right, so you'll have rules like I'm not going to buy it. If I'm going to enter bullish, I'm not going to enter on a 10-minute, topping wick candle, and that would be a candle that has more wick than body and tail. See, like that's one of my rules. All right, if I'm going to go into a bullish trade, I'm not going to enter on a topping wick candle. I'm not going to enter on a doji candle, okay? Because a doji candle defines a price as indecision or pause, all right? And if I'm being bullish, I don't want to enter on a red candle. Why? It's going in the wrong direction. You see how a trading plan would help you in entering your trades. It's a set of rules that you say, like, I only want to enter on when certain criteria are met. All right, that's what I'm looking for. All right, a set of rules where certain criteria is met. All right, now as a day trader, you're going to have to manage your position. All right, and before we get on to that, let's talk about some of the basics of trading. All right, everybody knows pretty much buy low, sell high, right? That's the basics, right? We want to buy low and sell high. But we don't want to be buying red candles that just keep dropping, right? I mean, cuz we don't want to buy into a downtrend. That's kind of a recipe for failure. All right? We want to buy low and sell high, but we want to buy low when price is moving up and then it has a small shallow pullback, or price is moving up and it's holding the higher ground. Okay, those are places where I'm very interested in buying, when I get that shallow pullback or it's holding the higher ground, because I know it's just consolidating up there and winding up to pop even higher. Okay, so that's the basics of trading: buy low, sell high, right? So let's go on to the next one, okay? There's only 3 actions to perform when trading. You're either going to buy, or you're going to sell, or you're going to hold. In other words, you're not going to sell or buy, all right? You're going to hold the position you're in, all right? You're not going to increase it. You're not going to decrease it, okay? And that hold could also mean, I'm going to hold on to my cash, okay? Remember, you don't have to trade, okay? You want to trade and you want to make money every day, but you don't have to trade. Sometimes it's more important to just kind of hold on to your cash and not trade unless all of your parameters are met. Trying to force something to happen can really blow up in a big way on you. It can really work against you. All right, so let's try another one. Let's see here. All right, there's 3 directions price will move. It's either up, down, or sideways. All right, 99% of the time. All right, price will either move up, down. And can I profit from falling prices? Yes, you can. You would have to have a margin account, or you would have to buy an inverse of that product or that security. All right, and it's called selling short. If you cannot find the inverse and you want to sell something before you buy it, it's called selling short. I feel like I missed a slide here. And I did. Yep, I lost that slide. All right. back here. 99% of the time, price is going to move up, down, or it's going to move sideways. Can you profit from falling prices? Yes. It's called the action of going short. So what does it mean when a trader says they sold a security short? Okay, in other words, it's the exact opposite of basic trading. Basic trading is buy low and sell high. Only this time you're going to sell high and buy low. All right, it's just the reverse. All right, so you think something's way too high, it's way overbought, so you sell it with the promise that you're going to buy it back lower. Now, sometimes you don't get to buy it back lower. It keeps going up. So you have to make sure that that's what you want to do. Now, when you do sell short, you're probably going to need a margin account. Now, speaking of accounts, if you're going to day trade, you're going to be subject to 2 or 3 different rules that you might not be aware of. Okay, one of them is the pattern day trader rule. All right, so if you go in and out more than 3 times in your trading account and you don't have $25,000 in it, they're going to flag you for pattern day trader, and they will cut you down to a cash account or restrict your trading. All right, it's called the pattern day trader rule. So if you're going to get in and out and you don't have $25,000, you could get flagged for that. And when you day trade, you're probably going to want that ability to get out of a trade if one is going against you. All right, so if you got a trade and you're going long and price no longer wants to go up and it starts coming down, that means you either got to sell it and violate the pattern day trader rule, or you have to hold on to it and then just suck it up as a loss and hopefully get out of it in the next day. All right, or you can do one other thing. You can, not while you're in the trade, but before you're in the trade, you can convert your account into a cash account, in which case you have no margin at all. All right, which means you're probably not going to be able to do any short selling because you don't have a margin. And you're going to have to wait for your funds to be settled through the clearinghouse, which usually takes about 2 or 3 days. Okay, so but that's possible. You can still do this. You can still day trade and swing trade with an account less than $25,000. Okay, because you got to think about it. As a trader, you got to decide, how much am I going to risk every single trade? All right, you don't want to risk everything you got. All right, because I mean, you could just blow up your account if you put it all on black and it comes in red or 00. Okay, so you want to decide. That's part of your day trading plan, is that you got to decide how much of your account you're willing to risk on each trade. That's part of your day trading plan. I'm only going to risk X amount, okay, and I'm going to manage it this way, and I'm going to get out when it hits my target or I hit my daily goal. All right, so that's part of your day trading plan, is that you've got an idea and a plan of how to attack your day. All right, I'm going to enter when green erases red. All right, and I'm going to manage it on the 10-minute chart. And when the 10-minute chart 3 EMA crosses over the 8 EMA, I'm going to end my trade, whether it is a gain or a loss. Okay, that could be a trading plan right there. Okay, so you got to think about it when you have an account, what size account you have, how much you're willing to risk, Now, personally, if you risk 2 to 5%, okay, if you risk 5%, you've got yourself 20 trades, all right? You have to incur 20 bad trades in a row to blow up your account, all right? If you have risked 2%, you can have 50 bad trades. Now, do you want to have the availability of having 50 bad trades that don't work out? Or do you want to have the availability of 20 bad trades that don't work out? Me, I would want 50. Why? Because I get more times up at bat. All right? So you got to think how much of your account you're willing to risk each time. Now, if you're going to be a cash account, okay, now you're only risking 2%, all right? So while that 2% is being cleared at the clearinghouse, or that 5% is being cleared at the clearinghouse, and they're settling the funds for that, you've got the other 5%, all right? You've got the other 95% or 98%, depending upon if you chose 2% of your account or 5% of your account, okay? You got either one of those, and then you've got that money left to trade with, okay? Now, there's another caveat to that, okay? Once your trade starts going in the right direction and you can move your stop up to break even, you've eliminated the risk for that trade. Okay, so now you can take another trade. Right? You've just eliminated the risk because you've moved your stop up to break even or better. Okay, so now you've just eliminated all of the risk to that trade. Now you can go out and take another trade. All right, so that's what we want to look for. We want to look for trades that move quickly into the direction where we can move our stop. And our stop is something that says, I'm only going to lose this much money on this trade. Okay, that's what a stop is there for. Okay, it's there to say, all right, I'm not going to lose any more than that. That's all there is to it. Okay, and when that stop, if that stop, either this stop's going to get hit or it's going to start moving in the right direction where I can move my stop up to break even. Now, when you move your stop up, you don't want to move it up too fast, because then you just get stopped out at break even, and then that doesn't do you any good, okay? You want to move it up in a methodical manner in which you can see price action would surpass that stop, and on a pullback, it would not come down unless, of course, it breaks minor support, okay? In other words, you wouldn't get stopped out. The only way it's going to get stopped out is if it breaks minor support. Okay, that's what I like to do. I like to see price move up and then see a little minor support created, like a little shelf, and then as price moves up past that, now I like to put my stop up underneath there, and now I've got some minor support that can protect me while I'm in my trade. Now, minor support can come in, many different time frames. You can find minor support on a 10-minute chart. You can find minor support on a daily chart. You can find it on a 2-hour chart. Okay, so let me hit the next slide. Okay, just something to be aware of. Not all securities can be sold short. All right, if you didn't know that, I'm not sure if you did or you didn't, but you might not know that. Not all securities can be sold short. And your broker may have to go borrow them from somebody else, and that would cost you money because your broker's going to charge you whatever it takes for him to go out and acquire those shares that you want to sell short. All right, selling short's the reversing the order and the timing involved with basic trading. A margin fee is the interest accrued from borrowing from your broker. Okay? In other words, you're borrowing from your broker when you sell short. Okay? Because you've got to pay him back. All right? So there'll be a margin fee involved with it when you do sell short. All right. In this case, a trader will sell high first, which is the action of shorting, then buy low after, and that's the action called is covering. Okay, their short position. They are returning the shares that they did not own in the first place, because a trader borrowed the shares, they sold shares that they didn't own. That trader will incur what is called a margin fee. All right, so they're going to hit you up for a margin fee, because you're selling something that you don't own. All right, now I like to use candlestick charts, okay? You can use an algorithm chart, you can use a bar chart, you can use Heikin-Ashi charts, you can use Renko charts, but when I trade, all right, I like to have price shown to me in a segmented time that I'm familiar with. All right, I want to see like where it opened on that candle. I want to see where it closed on that candle. I want to see what happened in between the open and the close of that candle. A candlestick is nothing more than the price action within a segment of time in the day. All right, now I like to use candlestick charts. You can use whatever you like. I find candlestick charts to be very easy to interpret. I find candlestick charts to be very easy to use. Okay, you might like a bar chart, and I got nothing against that. Okay, but for me, I like a candlestick chart. I'm not saying you have to have a chart, but it sure helps to see the price action. If you're going to day trade, you'll want to see the price action. Because when I day trade, what the art of day trading involves is finding a trend within a trend. Okay? In other words, I want to find a 10-minute uptrend inside of a daily uptrend. Okay? That's the art of day trading at its best. Okay? Now there's a way called going counter trend. All right? So in other words, we have a daily uptrend in the Fab 5, and for me the Fab 5 is the SPY, the FNGU, the QQQ, the IWM, and the DIA. Okay? Diamond Dow, the Russell 2000, the NASDAQ, the S&P 500, and the FNGU. Okay, so we got an uptrend on the daily charts for all of those. All right, but the thing today is price was pulling back. We got ourselves into a 2-hour downtrend. Okay, so I'm not a big fan of going counter trend. I prefer to play the uptrends. All right, the uptrends within the larger time frame uptrends. For me, it's just easier. It's easier because it's not shoveling. You guys know the saying, all right? It's not, you're not trying to swim against the tide, all right? Okay, you want to go with the majority of the traders that are trading that day. Okay, it's just a whole lot easier. If you go counter trend, which today we did trade counter trend, okay, but it's a lot easier, I'm going to tell you, when the bigger time frame is supporting the lower time frame. Because when you day trade, you can't use the daily chart to day trade off of, because you don't have an entry off the daily chart. You're going to have to scoot down to a lower time frame to find your entry. And what you're looking for is a pullback, all right, in the larger time frame that's going to work for you in your favor. All right, so if you've got a daily uptrend, you're looking for a 10-minute uptrend inside that daily uptrend. If you got a daily downtrend, you're looking for a 10-minute downtrend inside that daily downtrend. For me, that's just easier. It works out better, and you're not going counter trend. When you go counter trend, you never know when price is going to flip on you. Most of the time, it's at support. Okay, if you're going counter trend to a long, all right. If you're shorting a strong daily uptrend, you're going to find that it's probably going to reverse at support. But is it going to reverse at minor support, or is it going to reverse at major support? We don't know. And that's why counter trend becomes very risky. And it's easier just to stand aside and wait for the 10-minute uptrend within the daily uptrend. All right. So again, I like to use candlestick charts. All right. So how candlesticks work. All right. This is a segment of time. This is a monthly chart. This tail. All right. So price. This is the tail. Is that long thin line down at the bottom, and the short thin line over the top is the wick. And you can see here's the body, okay? The body is that solid section in between. If you don't know how to read candlesticks, get with me. I'd be happy to teach you. But anyways, you can see price started. It's a red candle, meaning price started right up here at the end of my pointer, okay? And in the process, okay, it went up to the top of that line up here, which created the wick. And in the process, it came all the way down to here, which created the tail. And then from the tail, it came all the way back up, and that created the wick and the tail. So I can see exactly how price went on this candle. It went up, and it didn't go any higher. Then it came all the way back down to here, and then it wound up going up right to here. Now, it might have done a whole lot of more wiggling around, but for the most part, this candle went up, went down, and then came back up. All right, and it's red because it finished lower than where it opened. This one opened here and finished there. See how it opens down here, so that means it's green. Okay, this one opened up here and finished lower, so it makes it red. All right, so sellers dominated this candle because it's red. Buyers dominated this candle because it's green. Okay, notice we have a series of 5 green candles in a row. Okay, something nice to find. But anyways, that's the body. That's the tail at the bottom, and the wick is up at top. Okay, I'm just assuming that not everybody knows what a candlestick is. Okay, the red candle means price started at the top of the body. Okay, and then it traded down. So on this candle, price went up and came all the way back. All right, I like to use 3 exponential moving averages when I trade. I like to trade with a really fast one, and that's my 3 EMA. Okay, that's going to be this yellow line right here. Okay, that's my 3 EMA. I also like to have my 8 EMA. All right, that's the white line. Okay, that's 3 exponential moving averages. And the third one is my 17 EMA. It happens to not be a line. It happens to be a series of dots. Okay, so it is a moving line of dots. All right, now if price is underneath those dots, it turns them red. If price is above those dots, it turns those dots green. Okay, so that's the 17 are those dots. The white is the 8, and the yellow is the 3. Okay, so you can see we got the faster moving average, all right, is under the medium moving average, okay, meaning the trend is down, okay? So we have a downtrend in the SPY today. Okay, so that's a 15-minute chart right there. So we have a 15-minute downtrend in the SPY. But don't forget, we also are in a daily uptrend. All right, so this is a counter trend trade. All right, so on this, we have price pulls down to here and then pulls back towards the 17 and then does a bearish engulfing. This is where red erases green, and that's where I want to enter, where red erases green. Okay, see here's the green because we start from right here. This is the bottom of that move. So the bulls brought it all the way up to here. Okay, now we're going to have red. Okay, he's going to erase the green. So here's the first part of the green right here. See these 3 green candles? So that means I can enter when red erases green right here on that candle. And then I can manage it. See, we have a downtrend. Notice the 3 is underneath the 8. Okay, the 3 and the 8 are underneath the 17. And the 3 and the 8 and the 17 are underneath the VWAP. That's that brown line that's very faint. Okay, so there's an entry there. And I can manage this until either the end of the day or until the 3 crosses back over the 8. Okay, so that would be my trade. I'm going to stay in this trade until either the 3 crosses the 8 or price erases that red candle. In other words, the bulls come in, all right, and just push price back up over the body of this candle right here. So where would my stop go? Probably 10 cents over that high. Now that's a wide stop, okay? But it is a trade. Remember, you only want to risk maybe 2%. Now when price gets down here, moves to the side, okay, now I can lower my stop to break even. Because number one, we came down, we moved to the right, and then we came down some more. Now I can move my stop to break even. I can actually move it right on top of that green candle. And then you can see price action comes down to here. And it's the end of the day, probably want to get out right there. So there's a trade from 605 down to 604 because we hit the target. That happened to be gap fill right there. 603, 604.06 right there. That was gap fill. That was the target. All right, so there's a trade and how I use the 3 exponential moving averages. All right, let's hit the next one. All right, I like to have VWAP. Okay, VWAP on my chart shows me where the pressure is coming from. Okay, if price is underneath VWAP, the bears probably have control. Notice the trend is underneath VWAP, telling me the bears are in charge today. Okay, here's VWAP. VWAP happens to be volume weighted average price. That means that's the average price traders paid for this security all day today. That's the average price. It's not going to be a straight line. It's going to move around. Because as price comes down, there'll be traders that buy it here. As price comes up, there might be traders that sell it up here. Okay, so it will tend to move along with some of the other exponential moving averages. All right, so VWAP helps show me where the pressure's coming from. It's coming from the sellers if price is underneath it. All right, if price is above it, it's coming from the buyers. All right, so that's what VWAP helps me decide or discover. I want to trade in the direction of the market because I don't have to swim against the tide, okay? So here we have a 2-hour chart. You can see we have a 2-hour downtrend. Okay, you can see right here. See the fast yellow line, okay, is underneath the white line on the 2-hour chart. Okay, the faster moving average underneath the slower moving average, we have ourselves a 2-hour downtrend. What do we want to look for? A 10-minute downtrend inside that 2-hour downtrend. Well, here we go. Here's the moving average crossing right there. See how the average, the yellow line crosses the 8 EMA. Okay, right there. Now I'm looking for a red candle to erase green that I can jump in on and hold this trade all the way to the end of the day or until the 3 crosses the 8. That's how I want to manage it. Now, when you've got multiple shares or multiple contracts, you can choose to manage any way you choose, all right? You can choose to say, you know what, I'm going to manage 20% on the 5-minute chart, all right? This is just an example, all right? Just an idea for you. I'm going to manage 20% on the 5-minute chart. In other words, when on the 5-minute chart, when the 3 crosses the 8, you're going to sell or close 20% of your position. Okay? And now I'm going to manage the other, another 40%, all right, on the 10-minute chart. Okay? So now on the 10-minute chart, when the 3 crosses the 8, you're going to sell the remaining 40%. You're going to sell 40% of what was the original position. Okay? And then you can decide, well, you know what? On the remaining 40%, because I just sold 20, I just sold 40, that's going to leave me another 40%. On the remaining 40, I'm going to manage that on the 15-minute chart. Okay, so there's just an idea how to manage your position. All right, you're either going to stop out, all right, or you're going to have the 3's going to cross over the 8, and that's going to terminate your trade. All right, everybody understand that? So you could use different time frames. It's the same thing as if you swing trade. Let's say you take, 3 contracts. One of them you can manage on the 2-hour. One of them you can manage on the 4-hour. And the other one you can manage on the 2-day. You guys heard me, right? Everybody here? Rickster only wants, yeah, okay, all right, good. All right, so awesome. Okay, so I trade a chart with 5 moving averages, all right? Oh, but wait, you just said you traded with 3. Okay, now I trade with 5, all right? I'm going to explain them to you. Okay, I use the 3 EMA, right? I already explained that one. I use the 8 EMA, I already explained that one, right? I use the 17 EMA, right? And VWAP happens to also be a moving average. Okay, so there's the 4th one. And the last one I use is anchored VWAP. All right? Now, I like to use anchored VWAP, and I call it the VWAP hustle. All right? And I'm just going to escape out of here so we can show you the VWAP hustle. All right, so let's take this down. All right, what is the VWAP hustle? Okay, so here's high of day. So I happen to have a tool on my platform, okay? If you're going to day trade, you're going to want a decent platform, all right? Something hopefully with anchored VWAP, hopefully, okay? Doesn't necessarily have to. There's ways around it. You can take your anchored VWAP, plant it on the high. That's the all-time high, okay? And you can see price is underneath that all-time high. So here's price this morning, could not break up over the all-time high anchored VWAP up here. So here's a 15-minute chart. I planted my VWAP on the high of day up there on the 6th. That was Friday because we made a new all-time high. You can see prices underneath it. So the bears are in charge. So I'm looking for 10-minute downtrends underneath the all-time high anchored VWAP. That's my pink line right there. Okay, so I could take, here is red erases green. All right, so here's the red erasing the green. So let's say let's define the green. Okay, green is price moves from this low up to this high. Okay, anybody dispute that? Everybody with me? My price moves from that low up to that high. Notice it didn't make a higher high. It failed to make a higher high. Okay, so you got 1, 2, triple top right there. Good chance price is going to break down. So you got a 1, 2, triple top. Okay. From the low might have been an area to short. From this low, well, right here. Okay. After you got the triple top, okay, right here, you have red erases green right there on that candle right there. You could have entered that candle, but you have to recognize you are playing counter trend. Okay, so red took out the green right here on this candle. But you got to recognize, remember that daily chart's still in an uptrend. That 2-hour chart's still in an uptrend. Okay? And you got to recognize you're playing with fire whenever you counter trend trade. Okay? Because it could go anytime, it could go against you. They could have found support at 606.09. All right? So, but you can see here, here's a counter trend trade. It's an igniting candle. Notice the size of the candle. It's a big candle, right? It's a big candle. That means there's a lot of sellers in there. So there's a big candle. You get a little pullback to the 3 or the 8. So there's a chance to load in either on the top of this wick right there or somewhere in the body of this red candle as it breaks down. Okay, so now you've got green 2 times. You've got green went from here up to here. And you've got green went from here up to here. And this one candle wipes out this green and this green. Red erases green. There's your entry right there. Okay? You can enter on that. Just recognizing that you're coming down into the pivot and you are on a counter trend trade. Okay? So you see price comes all the way down right there. So there's a red erases green entry. All right? All right, any questions? All right, it's 8:48. I'm going to leave the last 10 minutes for some questions. I know there's somebody out there that's probably confused, that doesn't understand it or has a question. All right? If you don't have a question, here's a question for you. Why aren't you a member of my room? Okay, there's my question for you. Why aren't you a member of my room? $7 gets you 30 days. You could have been in this trade right here for 10 contracts and made a couple $100 right there. You're signing up now. Thank you, Mary. All right, I love it. I love it. Oh, Marv, my bad. My bad. I love it. I love it, Marv. Thank you. All right. So that's what I do all day long. Only thing is I trade contracts. The reason I trade contracts is because I get more leverage from my money. All right. And when I can control and swing, let's say it costs me $2.20. Let's just do a little exercise here. Okay. All right, I'm going to take $2.20, all right, for a contract, $2.20. Each contract is 100 shares, okay? There's 1 times, times 100. That's $220. If I got 5 contracts, there's $1,100. Okay? So if I was to buy 500 shares of this for $604, so for $1,100, I get to control, look how much this costs, $604 per share. Okay? So for the next, if it costs me $220, for the next 7 days, let's just say there's 7 days, for the next 7 days, it costs me $1,100, and I got control of, these are $604 a share, okay? So I'm going to take 500 times 6. I'm just going to round it up, 604. Okay? $302,000 of capital I'm controlling with $1,100. Okay? That's what leverage is. $1,100 gives me control over $302,000. All right? That's the power of using calls and options. All right? Any other questions? Yes, buying out of the money requires, it doesn't really require, but you got to just manage it correctly, Stefan, right? I mean, if you just manage this, all right, let's say I bought puts, okay? Here it is, SPY. Here's my marching order game plan for the morning, okay? Price under 606.61 is my bearish red erases green entry for this morning. So 606.61. All right. All right. So 606.61, which would be right about there. Right. Actually, a little bit higher. Okay. That's green. That's red erases green. See the green? Red erases green right underneath there. 606.60. You got a 10-minute downtrend. This 3 never crossed the 8. All right? For the first, I don't know, 40 minutes right there. 50 minutes, 2 hours from right there, 661. Right there. So that was at 10:45. Okay? The 3 never crossed the 8, okay, until 1:30. But you saw the bottoming tail bullish engulfing right there. Okay? That was your clue to get out. Right there on the 10. See that? Bullish engulfing right there. That body erases that body. That just says get out. Get your profit and go play golf. Go fishing. You know? Go to the store, get some groceries. You know? Right there, you got your bullish engulfing. Billy B, where did you have your stop at the tip of the first leg this morning? My stop has to go up here. Okay, see that red, see that candle up there? So it has to go up there, but that was on a previous day, okay? See right here? So that was Friday's candle. So my stop has to go 10 cents over the high of day. Okay, Billy B, 10 cents over the high of day. Right up there. All right? The reason I say 10 cents, because sometimes price gets a little whippy. So 10 cents over the high of that. So as price pulls down to 606.61, I mean, you got the marching orders right here. Okay? I mean, if let's say you're not a member of my room, all right? let's just think about this for a minute. Let's say you're not even a member of my room and you went on Facebook and you caught the game plan right there. You still would have made money. Okay, 606.61, you short it right there. You got your bullish engulfing, you get out. That's at least a buck move right there. 606, you got your bullish engulfing at 605.46, time to get out. Right there, here's a dollar move right there. Okay, then you got your next green or red erases green right here. Okay, 605.37. Clear down to 604. You got another $1.50 move there. I mean, the game plan right there, it shows you how to make money every single day. Every single day, there's a game plan. And it shows you how to make money every single day. You talk about the VWAP hustle. Can you talk? Yeah. You just, on the VWAP hustle, let me go find it, VJ. I got it here somewhere. Somewhere. I had it. There it is. Okay, you got price is underneath VWAP. You got a downtrend. You've got red erases green. Okay, you're underneath the all-time high anchored VWAP. See that? You're looking for shorts because there's bearish pressure. You can see the slope of the anchored VWAP. All right. The slope is this way. You can't disagree with that, right? The slope is down. And you can see it because it keeps making lower highs. Right there, the slope is down. So you're looking for the 10-minute downtrend. It's counter trend, okay? So you got to be quick. And you got to remember, I'm playing counter trend. This is really in a yearly uptrend, a monthly uptrend, a semi-annual uptrend, a weekly uptrend, and a daily uptrend, a 4-hour uptrend. Okay, this thing, by all means, is in an uptrend. If you're going to play short, you're playing counter trend. Okay, so you got to recognize you are playing counter trend in a bullish market. So it's always good to be careful. All right, it's always good to take profits quickly. All right, it's nice to hit targets, but you got to remember, we came here to make money every single day. I try to make 1% of my account. And I started an account with, I don't know, $25,000. I'm up to 35, 36, 38. Okay. I'm up to $38,000 in that account. 1% every single day. Okay. That's all I'm looking for is 1%. Okay. So all I need to make is $250 for that day. Okay. Now I've got $25,250 for the next day. So I got to kind of make $260 the next day. Okay. Or $250, give or take. All right. So I'm looking to make $250, $260 all week, that first week. All right. And then as price moves up, as your account grows, you still want to make 1% of your account every single day. And all you're looking for is, here's the VWAP hustle. You're underneath the anchored VWAP. You've got the downtrend. You are counter trend. Take your profits quickly. You can see red erases green right here. See the green? Red erases the green. Okay, so remember what I say. Price can move up and then move back. That's neutral. All right? Price can move up and it can hold. That's a bullish outlook. Price can move up. Price can move back. That's neutral. But when it starts going further, that's bearish. All right? Where was your gap? There was no gap this morning. The gap was from a previous day, Stefan. The gap was from this day over here. See the gap? Here's the gap right there. This was the gap fill. right there. Notice price came all the way down to the gap fill. All right. You know all the time when price hits the gap fill, 9 times out of 10, it's going to bounce right there. So, it's just take your profits into it. At least, for me, I'm taking 80% of my position off the table. If it wants to run, I'll be happy that it did. But for the most part, I know I'm probably going to get a bounce right there. Not to mention it's end of day. I mean, why should I even chance it? I'll just might as well take it all and go home happy. Yeah, so you see there's no gap this morning. There was no gap. There was a small gap down, not by much though. See that? That's the only gap. See the thin yellow, thin blue line and the dotted dash right there. And Trader X, that was where the daily ADMA, for what it's worth. There you go. Isn't it funny? Hey, Trader X, isn't it funny how when a moving average or a significant, how do I say it? Like you say like an anchored VWAP, all right? An anchored VWAP from, I don't know, this year's low, all right, happens to line up with one other significant thing like gap fill, okay? It's almost like a magnet. It will go for it, right? You know what I'm saying? Whenever you get two things that line up and you can already see the downtrend, you say, oh my God, that's where it's going. It's almost whenever you get two major things kind of line up, here's the uptrend line and here's the, the all-time high anchored VWAP, and you look where they intersect, and lo and behold, price beams in on it like a hornet. All right, traders. All right, like I said, $7 gets you 30 days in my room. I will be surprised if you don't make your first month's subscription. All right, your first month is like $7. I'll be surprised if you don't make your second month subscription. Not to mention, we're putting on sales all the time. What did we have? We had a Veterans Day special. We had a Halloween special on the 31st. A veteran special on pricing. So you don't even have to pay full price. Okay? You can just, get in on a special. All right? Then we had a Black Friday special. And I know we're probably going to have an end of the year special. All right? And then we'll probably have a New Year's special. I mean, my gosh, you can not only can you make your second month subscription, but you'll also get it on special. Yeah, Trader X is a great share. If wherever Trader X is, he's always sharing some really good stuff. I love it when he's in my room. I just love it. Yeah, for what it's worth. All right, traders. All right, again, $7. Hey, by the way, all right, my buddy Rick. Hey, my buddy Rick's going to have a class on, all right, if you're not signing up for my special, at least sign up for his. All right, he's going to have a class coming up here. Oh, where did it go? I got it. I got it here somewhere. Here it is. The fast track on the road to wealth. So he's doing his road to wealth tour. Tuesday, December 17th. I'm not sure about the links. All right. Ed, can you post those links up? I don't know if $50 is for members or non-members. I'm not sure. But I think $50 for members. I think it's $150 for non-members. But if you're a non-member, I think you get 30 days of HRC service. Yeah, the link works fine. Okay, so there's the link right there. All right, you can find it right on my Facebook. You know what? I'm going to post it right now. Okay, I'm going to copy and post. I didn't say anything about the link, Ed. All right. Okay, so if you don't sign up for mine, send my buddy Rick some love. All right? He's going to teach you how he gained 50% on his first 2 months for his trading account. That's incredible. That's some really good stuff. Okay? So you can sign up for that. All right, traders. All right, hook me up. I need some $7 subscribers in my room. All right. I'm looking forward to working with you. I'm looking forward to making money with you. John, how many hours do I sleep at night? 3. I only sleep 3. Because I trade all night. Yeah, who's the sleepy? Exactly. That's not. I know. I know. All right, everybody. I loved having you guys with me. I don't know. I'm going to have an open house. Not this Friday, but next Friday on the 20th. You're all invited. Hope you show up. If I don't see you for Christmas, before Christmas, I want to wish you all happy holidays. I want to thank everyone for being here. I want to hope you all have lots of love at your family table on the holidays. All right. Thank you. Thank you, everybody, for being here. I appreciate that. Everybody have a wonderful evening.